I'm starting the recording.
Good morning, everybody, and welcome to Fibonacci and Elliott Wave Trading by Synergy Traders. We welcome you to this action-packed event. We have so many presenters today that are going to shed light on Elliott Wave and Fibonacci, and we hope that you include it in your trading because it's really an invaluable part of analyzing the markets and getting perspective on what happens next. And our first presenter is Sid Norris, and I had the pleasure of meeting him at another event previous to this, and you are really going to enjoy him. Over to you, Sid.
Thanks, Jody and David, for very much appreciate it. And let's get started with my presentation today. I'm showing you my website. It's called ElliottWavePlus.com, and if you go there, it has some information about me and et cetera, but I'd like to scroll down to the bottom before we get started and show you the terms of service and disclaimer that is always at my site at that tab at the bottom of every screen. So please go there and read that. And if I were to summarize it in one sentence, it would be: there's risk of loss in all trading. So today, what I've prepared for you is some actual start to finish wave counting. And so I've put up a chart that has no wave labels on it. This happens to be the Dow Jones Industrial Average, a very popular item for Elliott Wave newbies to start the counting and developing their wave counts on it. And one of the reasons is because there's so much data going way back on it. This chart starts back in the year 1900, and the Dow Jones Industrial Average actually started into existence in 1896. So this chart really isn't missing hardly any data at all. And so what we have is the price action on a Semilog chart. So what I'm going to do today is I'm going to talk about how to start labeling waves, how to get started on it, and this on-screen, on-chart list would be the way I would do it, and it is the way I started counting waves some decades ago. First thing you need to do is read the first 100 pages of Elliott Wave Principle by Frost and Prechter, and you'll want to do that I think 3 times in quick succession. And the reason is because it'll just sink in a lot better for you. So if you don't have that book, you can receive free access to it by going to my site, going to the bottom of any screen on my site or at my blog, and clicking right here, and that will take you directly to the book. It's the entire book is right here for you to read, including the sections, and this is basically the foundational rules and guidelines of the Elliott Wave Principle. Now, that being said, I think there's once you read those first 100 pages of that book, there's other materials available at my site under the Resources tab. So you go to Resources tab and hit Guides. And the very second guide here, the guides are basically documents I've written about different things, and then I've had some guests that have written some educational documents that are all in a collection here. But this guide number 2, Elliott Wave Explained, an outline of the wave principle, is there at my site all the time, and it is more of about a 10-page document where I took the entire wave principle and built it into an outline. No extra words here. So you can very quickly look at the basic rules and guidelines, how definition of an impulse wave, typical Fibonacci relationships, definitions of several different kinds of corrective waves, all the different kinds, and guidelines, a number of guidelines, how to draw Elliott wave trend channels, and that's all in a very short, about 10-page document, and I think that would make a really good place. Once you've gotten the basic idea down by reading the first 100 pages of Elliott wave principle, you could go to that outline and check for very quickly for a list of typical Fibonacci relationships between waves, and et cetera, et cetera, et cetera. So my long-term count on the Dow Jones Industrial Average, and this is a quarterly chart, and I show this every week in my weekly counts webinar. I start with this slide every week and then quickly move through, but this is my long-term count on Dow Jones Industrial Average. And since we only have data back to 1900, my main count is that we have wave 1 at the September 1929 high, wave 2 in 1932, that was about a 90% crash that happened in just a 3-year period. A wave 3 at super cycle degree, that's that olive color, at the 2000 high, wave 4, super cycle wave 4 at the 2009 low, and then a 5-wave up structure, either complete or very nearly complete up from that 2009 low. Now, you might look at this, there's a lot of information on here. There's Fibonacci targets and things. You might say, well, how would I develop such a roadmap? And the best way is to, and you go to this list right here, and it'll tell you to start with a professional's long-term wave count and move to smaller time frames from there, adding smaller degree labels and Fibonacci targets as you go. So what I'm going to do today is I'm going to do that for you live on live candles. Okay. The first rule I have about long-term charts is you absolutely must use Semilog charts. Here's what this chart would look like on a regular linear scale. You wouldn't even be able to see any of the waves or any of the price action until you got past 1982. And then it would be very difficult to label the waves here. And so on the longer term chart that you're using, like quarterly, you definitely want to use a Semilog scale. Here's the other really important thing on using Semilog charts, and is notice that down at the very start of this chart, like in 1903, the Dow Jones Industrial Average was $30.88. 30. It was at 30. Today, right this second, it's at 27,000. So what this does is it figures a percentage of movement as it moves along, and it allows you to actually see and label the waves. And you'll notice that as the further up in the price scale you get, the closer together these numbers get. So it really, at 27,000, as far as on this quarterly chart, it doesn't look like 50,000 is really that far away. And so the numbers get, the increments get closer and closer on the scale as you move along. But here's the real important thing about using Semilog charts. I've got some Fibonacci price targets on this, and what it did. So what I did, and I'll just draw a new one for you. I'll delete the Fibonacci, and I'll draw a new. Let's say I wanted to start at this low in 1904, and I wanted to draw a Fibonacci relationship tool. That is, I want to know if this is the length of wave 1, and this is wave 2, where's the typical targets for a wave 3? So I've listed out here for you what the most typical targets are on the waves within the wave principle. And it says here, wave 3s are commonly at least 1.618 times the length of wave 1. So when I drew that, I'll delete this line. That target came in right here, right there, as if that would be probably the best spot for a wave 3 target. But as you can see, that basically is right at that 1987 Black Monday crash. And there wasn't enough of a correction there for that to be a wave 3. And so the wave 3, if measuring it from the 1903 low, might be an extended target where the wave 3 would be 2.618 times the length of wave 1 back here. And that target comes in at 30,200, and we've come within just a few hundred Dow points in February of this year of striking that target. And so if that is a correct wave labeling, and I'll just put those labels in here for now, and then we'll explore some different options. So that would be a 1 and a 2 in using this example. And since there was no wave 3 target, there was no big correction after a typical wave 3 target. The wave 3 may have been extended. So what we might be at right about now is a super cycle wave 3 top. And price certainly came close enough for that to be a possibility. But I want to show you, and I'm just going to cast those labels aside for a second. Just throw them over here in a group. A wave count that Robert Prechter has been publishing for decades. But I got to tell you, when you're talking about 100 years or 200 years worth of data, a decade or two is actually a fairly small amount. So this is a scan I took from a book I have called Beautiful Pictures. It was published by Prechter back in, I think, 2001 or 2000. And it's suggesting that if you take the European data going back to 1780, and you tag that on to the start of the Dow Jones Industrial Average that occurred about in the year 1900, you end up with this wave count of a 1, 2, 3 in 1929, 4 in 1932, and then 5 waves up from there. And at the time, Prechter was thinking that 2000 top was the end of 5 waves up, going all the way back, 200 years, 200 plus years. So this wave count, as far as a long-term wave count, could still be correct. It's just that the top wasn't in yet. So let's explore that idea. And so that would mean that wave 3 at supercycle degree was at the 1929 top. Wave 4 was at the 1932 bottom. And we're seeking, we're looking for the end of a 5th wave up here. If that's correct, and we're going all the way back to the year, what was it, 1740, 1780? Well, he's got that starting at about 5 on the Dow, on a Dow Jones Industrial Average, kind of worked backwards of 5. And really, if you're going to start at 5, why not start at 0? If everything, if we had 5 or the end of 3 waves up, a supercycle wave 3 at the 1929 roaring 20s high, and then a 90% crash for a wave 4 right there. Let's start the analysis at 0.10, 10 cents. 10 cents. So that's a starting point I can't move to by just drawing it there. I have to manually put it there. And when I do that, and I look for, let's see, some Fibonacci relationships from there, and we look for a fifth wave up, fifth wave up, that is, excuse me, a typical 0.618 times the net traveled of 1 through 3. That would put a typical target for the end of the fifth wave right there. Now let's see if I've got this thing. Yeah, and I'm using Semilog scale for the price band. And I'm also using Semilog for the drawing tools. This is an important point. Very few platforms allow you to tell the Fibonacci targets to also use Semilog Math. Now I'm using Trade Navigator by Genesis, but some really popular platforms like Thinkorswim won't do this. You can put the price candles in Semilog scale, but if you draw some Fibonacci targets, they will change, and they will give you a completely different targets, because the drawing tools in Thinkorswim only work in linear math. So it's very important to have a platform that uses Semilog tools. You can see when I flip it to Semilog, it is it changes those targets. So we can play around with a starting point. What if the Dow did start at $5 per share 200 years ago? And let's say that wave 3 was at the 1929 high and wave 4 at the 1932 low. That would give us this fifth wave up has just blown way higher than a typical 0.618 target. And it's even blown up where the fifth wave up from that low in 1932 is well past equality with waves 1 through 3, and we're nearing where the fifth wave up starting 1740 could be 45,000 in the Dow. That could be the target for super cycle wave 5, and I find that to be a more credible idea, where you start the Dow Jones Industrial Average 200 years ago by tacking on the European data at about 5, and then you have a very extended fifth wave target up at about 46,000 on the Dow. So those are really long-term targets that we really, they're interesting, but have little bearing to our daily trading. So I'm going to get this chart sized back up, and I'm going to go back to my main count, where this was the end of a wave 2. The reason I like the 1929 as the end of a wave 2 is because the crash going down into that 1929 low was a 90% crash. I've never seen a wave 4 on any chart that crashed 90%. Okay, so here's how we move forward from establishing. Let's say we want to go ahead with my main count and put a wave 2 there. Now we're looking for a 5 wave up structure from that low. It's pretty easy to see a 1 and a 2 and a 3 and a 4, possibly a wave 5 here. We'll get to that in a second. And these labels would be 1 degree less, so they would be the teal or cycle degree labels. So we're going to go 1 up from the 1929 low. So here's what I'm basically doing. I'm starting with the longest term chart, and I'm establishing a wave count that I can move forward into smaller time frame charts and use them there. So you start with a professional's long-term count, and then you move to smaller time frames from there, adding smaller degree labels and Fibonacci targets as you go. So now when you're just drawing labels in like I am, you want to also check on and see if they are meeting a typical Fibonacci targets. Like a typical wave 3, wave 3s are commonly at least 1.618 times the length of wave 1. So that is at this level right here in the Semilog chart. So that wave 3 was slightly short, but not much. It came pretty close, so that would be very likely a cycle degree wave 3 in 1966, a cycle degree wave 4 in 1974. And then we're looking for 5 waves up here within the 5th wave. And these would be primary degree labels. So we're not worrying about anything prior to 1929 anymore. We're just looking at 1929 forward. And to the naked eye, what this looks like is potentially this. And this would be a supercycle wave 3 top, which, as you will recall, was one of the first suggestions I made based on this Fibonacci starting at, let's see, right here at the 1903 low. There's wave 1, 2, and there is your wave 3, supercycle wave 3 target if it is 2.618 times length of wave 1. So I'm going to leave that on the chart. 3 equal 1 times 2.618. And when we move to lower time frame charts, it'll still be there. That's right there. And I'm also going to color that. Yeah, it's colored. I want to color that olive. So it's color coded when we move to smaller time frame charts. So now we have a wave count, and I'm placing the labels as if the top is in. And I want to remind you that we fell about 600 Dow points in February short of that Fibonacci target. So I'm not going to assume that, oh, wow, we have a major top. I'm going to short this market right this second, and I'll get to that. But that brings me to this point here. Use an indicator-based methodology to confirm trend changes before jumping with both feet into a trend change. This is very important, and I'll show you how I do that here shortly. So now what we have is we have some labels. We have a target up here. We also, let's see, on this one, yeah, we have the wave 3 teal target right here. And that looks good. And there's one other target I want to establish, and that is where waves 5 in teal or cycle degree might have a Fibonacci relationship with the rest of the teal. So that's where it would be equal, and it really kind of overshot. So I'm going to leave that, let's see, cycle degree, that would be cycle degree or teal. The closest target we have on that would be equality target, where wave 5 would be equal to the net traveled of 1 through 3. I'm going to put these in teal. And I'm going to put one more enormously higher target on there just for grins. And so what we have now is we have a target here, back down a ways, where the teal wave 5 would equal the net travel to 1 through 3. It would just simply equal it. So that would be an extended teal 5. It shows you how what this shows you is how extended these waves are getting when you start looking at a long-term chart. So we'll take one last look at this, and we've established a couple of targets up here. A teal target, that would be a cycle degree target, very large degree, super cycle target, and I'm going to establish one more target up from this low here. And actually, I'm going to do that this way. I'm going to look for a Burgundy or primary degree wave 5 target. And that would be where Burgundy wave 5 would be 0.618 times the net travel to Burgundy 1 through 3. So that would be up from the 1974 low. So we have one more target we can put on before we move to the next chart. So this would be 5 equals 1 through 3 times 0.618. That is the most typical target for a fifth wave. It's amazing how often that target does work. So now I'm going to take this chart and I'm going to change it from a quarterly to a monthly chart. And once I'm in the monthly, we're basically dealing with the Y2K or high, the year 2000, and the 2009 low. And so this is a monthly chart of the Dow Jones Industrial Average. And we're going to start looking at the subdivisions on the way up here. So, and I want to make sure that all my targets are showing here. So we've got a couple of large degree targets. We got another, the cycle degree target is still quite a bit lower. Then there's an enormously higher target on the cycle degree labels at 102,000 on the Dow. So now we're dealing with a monthly chart, and we want to see how the internal waves count moving up here. Now, when we get into the monthly chart, we might be able to utilize the MACD indicator to help us decide where some of these waves are. And so these waves are going to be black or intermediate degree waves. Black or intermediate degree waves. There should be 5 intermediate black degree waves within the fifth wave in Burgundy on the way up. So, and based on the MACD indicator moving up strongly through this high right here, that, just from experience on the monthly chart, is likely the end of a third wave. So that third wave was in 2015, and then the fourth wave was likely in the first quarter of 2016. And then now we're going to, just for grins, let's continue to label this as a large degree top right there in February. Is there anything else we can do Fibonacci-wise on this monthly chart of the Dow right here? So yes, there is. We can look for wave 5 to be to have a Fibonacci relationship, I'm going to draw that to the actual low there, here. Wave 5 to have a Fibonacci relationship with the net traveled of 1 through 3. So wave 5 be equal to 1 through 3 times 0.618. That's the most common target. So now we have, we're developing a Fibonacci cluster for fifth wave up from the 2009 low. And now we can, now that we have that target established, we can move to the weekly chart. You see what we're doing? We're just continuing to move to lower time frames, and we're looking for Fibonacci relationships that would prove our point of where we're putting our wave label. So now down here we have, in the case of the Dow, it didn't make a new low in the first quarter of 2016. Its low actually occurred in the third quarter of 2015. And now, if we go back to my original key, and we can go here for the key. So we've got black as intermediate degree, and we're going to go, and blue is going to be minor degree. And I have different point sizes on that. So we'll go back here. So we're going to look for 5 waves up from that low with internal Fibonacci relationships that support the case. So this is, I use the blue for minor, and there's blue wave 1, blue wave 2. Pretty obvious end of wave 3 there in the first quarter of 2018. And then we start getting into some of the nitty-gritty of what's going on. Now that looks like a pretty standard expanded flat for wave 4. The only problem with calling the February top a really large degree top is, in my opinion, the subdivisions on the way up on this wave here. It really looks like there was a triangle in here, and in Elliott Wave, triangle cannot appear alone in a wave 2 position. So this kind of looks like an ABC, and you don't really, that wouldn't be a suitable 5 wave structure into that high. Okay, and so now we're going to start dealing with a main count and an alternate count. So if the only, so the things, the items that support the February high as a really large Fibonacci high there are 2 large degree Fibonacci targets that are right there. One is a very large degree, super cycle degree, potential for a wave 3 top right there. And the other is that a wave 5 in black would have ended pretty much exactly where that top was. But so the only problem we really have in being super confident in that being a very, very important wave 3 top, super cycle wave 3 top, is the subdivisions of the price action moving forward. So what if this was a expanding triangle, okay, and this is all in the book, A, B, C, D, E, and if that's an expanding triangle, then this could have been just a wave 4 at the March low, and that we would be getting a 5 wave structure up to a new high, and that would be the top. So the one problem with that wave count is that an expanding triangle is a very, very rare structure. Very rare structure. You don't hardly ever see them. You know, they have happened, but you know, it's like a once in a on this size of a time frame. Like this is we're on a weekly chart. There might be one or two in the whole history of the stock market. So the rarity of the structure also supports the main count that we may have a large degree wave 3 top end. So if we're going to get a wave 4 next, then we want to refer back to our resources and look for what kind of corrective structures we could look for next. And there's zigzags, there's flats, there's several kinds of flats, there's triangles, and there's also something called combination correction. So actually, if we're going to be moving into a wave 4 here based on this wave count that we've been developing live, there's a number of possibilities. I can tell you on my site, I use a technique called Hurst cycle analysis, and it is expecting that we are going to get a correction next. And let's just say it's going to be a wave 4 at super cycle degree. That correction is going to last until the fourth quarter of 2023. That's when the next 9-year cycle trough is. Because I marry Hurst cycle analysis to all of my wave counts, and I use computer generated Hurst cycle analysis, and that keeps me from applying any kind of bearish or bullish bias to my wave counts. You take just a regular wave counter, and if they aren't using any additional tools, cycle tools, in my opinion, they are leaving themselves open to allowing a bullish bias or a bearish bias to make their way into their wave counts. So we have a main and an alternate. The alternate is we might get one last new high, and that would be the end of the new high. But the main count is that we have a super cycle wave 3 top in place. So what kind of structures can we have here? Well, if this was a 5-wave structure to the downside, and that's not a given, then we would get an A, B, C zigzag, but that wouldn't last long enough to get over to December 2023. That might be just the first, an ABC zigzag might be the first leg of a longer lasting correction. We call those a combination correction. And if that was the case, that would be what we would label as a wave W. And we're starting to get into some labeling that is a little more unusual, but it happens fairly commonly. So it's real important to understand the idea of a combination correction. Combination corrections come in Elliott wave when the first corrective pattern doesn't last long enough to complete the degree of correction that you're expecting next. So if it started with an ABC zigzag, you can get an X wave zigzag to the upside after that. And then you would get potentially a final zigzag to the downside, and this is what we call a double zigzag. So if The move down that happened in very quickly from the February high to the March low was a 5-wave structure. Then this would be an A. We would be in a B wave now. And then we get a C wave to the downside. That is only one of the possible structures that we could see. And the reason it would have to be a zigzag to the downside would be that this internally subdivided as a 5. When you go back to the definition of the corrections, zigzags subdivide internally as a 5, 3, 5, and they're usually a sharp correction. A flat starts with a 3. It's at a 3, 3, 5. So what if we got a flat? So first of all, if this was a 3-wave structure to the upside, it would be possible in a flat for it to make a new all-time high here, like that. We get a new all-time high. And then you could get the combination correction down through December 2023 could be starting with a flat that would have a slight new high inside of it. Based on what I've seen of the upward movement so far in the Dow Jones Industrial Average, that count has potential of the upward, and the reason is this upward movement so far. And now we're moving to a daily chart. So this, I'm going to get rid of some of these indicators down here. And I'd like to retain the MACD on this daily chart for this example. Even on the MACD, you can see a pattern. It's an ABC pattern. So this looks like an ABC. Now, so far, price has been moving sideways, and it hasn't broken down. It started to move down in mid-April, but then we have this upward movement. So I assume that some of the people in the room do have some Elliott wave knowledge. Can any of you describe this price action to the upside we've seen on the daily chart in the chat? Is there a word you would have that would describe what that price action looks like? For you people that have some experience in Elliott waves? Could be a wedge, possibly an ending, a diagonal. The only problem with calling that a diagonal at this juncture would be you'd have to it would have to fit into the context. So I'm going to draw some additional labels here. In my opinion, the super aggressive 38% crash that occurred from mid-February through mid-March occurred in 3 waves. It was very likely corrective, because I can't see A, B, C. I can't really see a suitable 5th wave structure down here, so I prefer to call it a C wave. But then on the way up, this looks like, to me, an ABC to the upside. Now, why can anyone tell me why I wouldn't label this as a 1, 2, and 3, wave 3? Anybody? And we might want to go back to some of the original rules. 3 is shorter than 1. If that was a wave 3, it would be shorter than 1. Now, that is allowed, but wave 3 cannot be the shortest of waves 1, 3, or 5 in an impulse. So the fact, just the simple fact that this leg up here is shorter than this leg really points us to the likelihood that this upward movement is actually corrective. Yeah, there's a number of problems with it. Also, the wave A could have ended here, but I'll just put it here for this now. So the shortness of this leg up is troubling. And the word I was looking for on this upward movement here in the Dow Jones Industrial Average is corrective. It appears to be a corrective look. So we have a high back here. So could this be 3 waves down for wave A, and then 3 waves up for wave B? Well, once again, we have the problem of this whole corrective pattern needs to last all the way to, based on Hurst cycle analysis, to December of 2023. So if this is a super cycle wave 3 top, and we're going to get a corrective pattern, yeah, it could start with an A, B, C, but if this was 3 waves down, that really kind of damages that idea. So what about the possibility of this being 3 waves down for wave 1? Is it possible to have a wave 1 that is only a 3-wave structure? Any experts in the room? When would that be allowable? Where wave 1 was just a 3-wave structure? In a diagonal, exactly. A leading diagonal or an ending diagonal, either way. But in this case, since we're labeling it with a wave 1, it would be a potential leading diagonal. And then these degree of labels would be wrong, and this might be an A, B, C for a wave 2 of a diagonal here. And diagonals, they eat up some time. They eat up some time. So if this move to the downside is going to start with a diagonal, and we've already seen the end of wave 1 and the end of wave 2 here, and we'll eventually move down like this. And that would be wave A. So the question is, how long is it going to take for that structure to work its way through? So this B would be over here, and this would be a 3, 4, 5. And so what I've basically just drawn for you is a roadmap that I'll show you in a minute that is real similar to what I've developed. And so I've started with the longest time frames, drew the Fibonacci's, and started putting the labels on, left the targets on as I moved through the different time frames. So I moved from the longest time frames to the shortest time frames, and what I ended up with was something really similar to this roadmap right here that expects a leading diagonal for wave A, and using Hurst cycle analysis, which I integrate into my work. There's an 18-month cycle trough due in August of 2021. There's that 9-year cycle trough due in December of 2023. So we would start with a 5-wave diagonal down, get a wave B to the upside, and then the finish of the large degree correction in December 2023. Notice that no matter how my count works out on the longer term counts, still looking for that ABC corrective structure, no matter what my count is, from a large degree Fibonacci target way up here. So that what I've hopefully I've done for you today, and I'm going to switch back to the quarterly chart, is I've showed you the resources, materials that you need to start counting waves, and shown you an example of how you move through the thought process of developing a wave count. And one last thing I want to show you is that as you can see on my weekly chart, I'm expecting a top up in here, and so is Hurst, and a move down next down into the late October, early November, and that would be a 40-week cycle trough due right there. So I'm looking for a move to the downside. Well, remember on my instructions, I said that you want to use an indicator-based methodology to confirm trend changes when trading. I'm almost finished here. I'm about running out of time, so I'm going to show you this just one more thing. I have these trend charts that I've developed on a daily chart. This is a trend following template, and I just started this a new service, and it's only $25 a month. So you go to my site and you hit subscriptions, and it's called Daily Trend Reports Plan. And every day we show a trend following, and this is an indicator-based trend following system that'll keep you from jumping in too early on these Elliott Wave and Fibonacci shows exact points, Fibonacci targets where a change would be expected. But that requires that your Elliott wave count be exactly correct and your Fibonacci target be the right one. Sometimes there's other Fibonacci targets that it may be trying to stretch to. But when you, this daily trend reports plan, you hit the subscribe button there, there's the pricing, there's all my different levels of service. But every night for only $25, you get daily trend reports on 20 popular items. That's commodities, currencies, bonds, the most popular stock market indices, really a survey of the entire market. You also see algorithmic trade signals for only $25 a month, and my Elliott Wave analysis on Bitcoin on that first level. That's a new service that I just started, and you get this chart on the Dow Jones Industrial Average, S&P, Russell, NASDAQ, and everything, and it shows you a bunch of things. For instance, that right now they're still really in a trendless environment, and the Dow is flirted with this lower trend line here, but it's here the last 2 days it's moving the upside. It flirted with it and kind of broke the trend channel, but it's just not giving way yet. This chart would allow you to wait until you've got a trend following signal in order to trade a particular idea that I had based on Elliott Wave and Hurst. Very quickly, I'll show my offer associated with today's presentation, and that is that if you go to my site and click on subscriptions and pick one of those subscriptions that you might be interested, click on through and get to that pricing page, you can get your first month half price if you are a new subscriber. If you're a new subscriber, and if you've never subscribed before. So this is not for people that have been subscribing with me prior. It's for, so if you're a new person to my work, and all you have to do is go on through the checkout process and use the coupon code at checkout of TRS August 2020, exactly like that, with the capitals and the minus sign and everything. That coupon code will work on any level of service that I have. So if you went on through to checkout and use that coupon code, you get half price on your first month on any of these levels of service. Each level of service of my site includes everything that's in all of the lower services. So as you progress through, you get everything in the first one. Like if you subscribe to the Pro plan, you get everything that's in that one, which includes the weekly webinars. That's the most popular plan, but also twice per week screenshots, daily trend reports. There's a ton of good information there. So that, if one of the hosts wants to jump back in and let me know if my time is up or if you have any questions or.
Yep. Yeah, that was great.
Okay.
Sid, thank you.
My pleasure. Thank you.
Thank you for opening the day for us.